Assalamualaikum and very good morning to all of you. We'll be starting with another lecture of OCM for Standard 12th Commerce, chapter number 4, that is business services. We have already studied three basic business services in the previous lectures, starting from transportation to various modes of transportation, then warehousing with its functions and types, and communication with its modern and postal services. So today we'll be studying one very interesting and very important business service, that is insurance. What do you mean by insurance? Insurance is a means of protection from financial loss. It is a form of risk management primarily used to hedge against the risk of contingent or uncertain loss. What is insurance in basic terms? Insurance is basically a protection of goods, a protection of risk from any loss. We all know that business is surrounded by risk. If you want to conduct a business, you have to take business risk. You have to take risk. You cannot survive a business without taking risk. You cannot conduct a business without taking risk. So in order to minimize this risk, in order to minimize the cause of loss or the frequency of loss or the uh, reach of the loss or the percentage of loss, in order to minimize that, you undertake insurance services. It is a contract between the insurer and the insured, whereby the insurer agrees to compensate the insured against loss. Insured and insurer, there are two parties to an insurance: the person who is taking the insurance and the person who is actually giving the insurance company. The person who is taking the insurance is called as insurer, and the person and the company which is giving insurance or undertaking risk is called as insured. So it is a contract between these two parties, wherein the insurer, sorry, I have made a mistake. The person who is taking the insurance is insured, and the person or the company which is giving the insurance policy and taking the risk is insurer. Okay, make it very clear. So the person who is giving it is a contract between the company and the individual, wherein the company undertakes the guarantee to minimize the risk of loss or uncertainty that happens to the insured for a certain fees or premium which is to be paid by the insured from time to time. The insured has to pay a certain fixed sum at of money on timely basis to the insurer, that is called as premium. Things that I am telling you, insured, insurer, or premium, these are the basic terminologies of insurance. We'll be studying it in detail. Some of the basic terms in insurance are as follows. The very first term of insurance is insured. I've already said, the person who is protected against certain loss. Insured is known as assured in case of life insurance contracts. He is the policy holder. Why is it said insured in other forms? Sorry. Why is it said insured in other forms and not uh, assured? And why is it said assured in case of life insurance policy only? Why? Because in other forms of insurance like marine insurance, fire insurance, or any other general insurance, the person is compensated. If I am taking the insurance policy, I am only secured. I will only be getting returns and I will be minimizing my risk and my loss. But in case of life insurance, it is not so. Why? Because if I am taking life insurance policy of my life and I die, the company is assuring me that uh, your family will be looked after. They will be receiving your money, and they will be they will be assured that your life is can be started again without me. I am not going to be compensated, my family is going to be compensated. That is why insured is called as assured in case of life insurance. The second important term is insurer, the firm or the person who agrees to compensate the insured against losses for a consideration. Insurer is known as assurer in case of life insurance company. Similarly, like you said, insured in case of other insurance and assured in case of life insurance, similar case applies here. If you are giving other insurances, if you are taking guarantee for compensating other losses, it is called as insurer. But if you are a company which is providing life insurance, you are the assurer, you are the one who is giving assurity that after the life is taken, the family will be compensated, because he is bound to get the sum assured on the maturity of the policy or the nominee will get the sum assured on the death of the policy holder. Why is it called as assurer? Because the insurance company gives you guarantee that if you die within the stipulated period, your nominee will be assuredly given the money, or if you survive, you will be paid your money back. This is our assurance. That is why the insurance company is called as assurer in case of life insurance. In case of other insurance, if the person survives, if the thing or the product that is being insured is not damaged, the insurance company does not pay you anything. So that is not assurance. You may or may not receive the money, but in case of life insurance, you have to receive money either in case of death or maturity, whichever is earlier. Okay. Premium, the consideration for which the insurer agrees to insure the insured. It is paid by the insured to the insurer. Example, if I am taking insurance from XYZ company, I am insured and XYZ company is insurer. This is clear. I will pay certain money on timely basis to XYZ company, and this money is called as premium. This is the money for which XYZ company is giving me insurance. Clear? Policy, the statement of contract between the insured and the insurer. The statement or the contract or the deal or the agreement between me and XYZ company is called as policy. It have all the terms and conditions mentioned. When will I get the money, why will I get the money, when I will not get the money, everything is mentioned in the insurance policy. What is the amount of premium, what is the rate of premium, what is the maximum years of payment of premium, everything is mentioned in the policy. Okay. Claim, it is a demand made by the insured to the insurer to compensate for loss or occurrence of mishap. Okay. In case of losses or mishap, if I have taken fire insurance and my warehouse have been lit by fire, I will go to the insurance company XYZ and ask them to pay me my money back or minimize my loss. What am I demanding them is claim. I am claiming my insurance policy. Proposal, it is a written request by the insured to the insurance company to issue an insurance policy. Proposal is the very first step wherein I go to the XYZ company and I ask XYZ company that I am interested in buying insurance for my products. So that is proposal. Subject matter, it refers to the subject or entity for which insurance is taken. Like in case of life insurance, my life is the subject matter. In case of marine insurance, the ship or the consignment is the subject matter. In case of fire insurance, the house or the factory is the subject matter. The thing for which insurance is taken is called as the subject matter of insurance. Is it clear? It is very important to know these basic terms in case of insurance. Okay. So today we'll be studying only about various principles of insurance. Insurance is based on various principles. It is not like just taking risk and giving money. No, there are certain things that has to be cleared in between the insurance company and the person taking the insurance. The very first principle of insurance is principle of utmost good faith. In all types of insurance contracts, both the parties must have utmost good faith towards each other. What do you mean by utmost good faith? That means there should not be any secrecy between the insurance company and the policyholder. Because if you are hiding something from the insurance company and they finds it out later on, they will not be giving you the insurance claim and you will be at loss. Also, the insurance company should be very clear in their activity and they should not undertake any fraudulent activities and use the money of the insured for wrong purposes. There should be utmost good faith, highest good faith between both the parties. The insurer and the insured must disclose all materials. There should not be any secrecy and it should be disclosed correctly and completely. No incomplete statements should be made, nothing should be hidden. The insured must provide complete, clear and correct information of the subject matter of insurance to the insured. Yes, this is important. Only the subject matter has to be discussed or disclosed completely and correctly. You do not have to give your personal details in case of house insurance or fire insurance. Only the house that you are insuring or the products that you are insuring, you have to give information about that. Okay, only the subject matter concerned should be disclosed. You do not have to give any unnecessary information. Similarly, the insurer must provide relevant information regarding terms and conditions of the contract. Yes, I said that the company should also be clear on their part and they should also give proper information about the terms and conditions. Otherwise, someday if the insured comes and asks for claim and you say no, we have certain policy, we are not going to give you insurance. So this should be said at the time of taking insurance itself and not at the time of making claim. Failure to provide complete, correct and clear information may lead to non-settlement of claim. I'll give you a very basic example. If a person XYZ wants to take life insurance and he have a heart problem, he have had a cardiac arrest earlier and he does not disclose this information to the life insurance company. Okay, he is not saying it to them, and later on after a month or 2 months of taking insurance, if the person dies out of cardiac arrest, the insurance company and the nominees of the person goes to the insurance company and ask for the claim. The insurance company will be first analyzing what was the cause of death, and if they find out that the cause of death was cardiac arrest and the person had a cardiac arrest previously, a heart attack previously, and he does not disclose this in the policy, he have not mentioned this in the policy, so he have not fulfilled the principle of utmost good faith. He have nullified the principle of utmost good faith. He have cheated with the insurance company, and so the entire agreement, the entire policy becomes null and void, and there is non-settlement of claim, and the insurance company have the right to deny to pay compensation to its nominees because the person, the assured failed to give or fulfill the principle of utmost good faith. Understood? The second principle that we'll be studying today is principle of insurable interest. Insurable interest means some financial interest in the subject matter. The insured must have insurable interest in the subject matter of insurance. It is applicable to all insurance contracts, including life insurance. It is said to have insurable interest in subject matter when the existence of that subject matter puts the insured in a financial benefit or loss, whereas non-existence put them in a financial loss. Now understand it very calmly and very easily. Insurable interest. If I am taking insurance of certain goods, certain products, the loss of that product should make me a financially weaker, or the saving of that product should make me financially stronger. For example, I can take an insurance of my house, of my car, of my goods, of my warehouse. I cannot take insurance policy of anybody else's house, a neighbor's house, or a neighbor's factory, or a friend's office, or a friend's product. No. Why? Because if my house is burnt, I will be having financial loss. But if my neighbor's house is burnt, I am not at any loss. So at someday I may go and put fire in their house, and then go to the insurance company and claim that the house is burned. Now give me insurance money. This can be done. Why? Because I did not have any interest in the house of my neighbor, but I took insurance, so that is not applicable. You should have a direct contact and insurable interest in the property or the person you are taking insurance for. Example, a person has insurable interest in his own life and property. I have insurable interest in my life, I can take my life insurance. I have insurable interest in the health of my family, my daughter, my husband, my mother, my father. So I can take health insurance of these people. I cannot go and pick a random person from the street and go to the insurance company and take his life insurance. Why? Because after taking that life insurance, I may myself go and shoot that person and then claim for money. It doesn't matter whether that person lives or dies, but if my family is living or dying, I have insurable interest in their life. So an insurable interest is very necessary for taking insurance. This was example of life insurance. Another example is a businessman has insurable interest in the goods he deals and in the property of the business. Reliance Group of Company can take insurance for only the warehouses of Reliance companies and not of Tata companies, because they are competitors. If Reliance company is taking insurance of Tata, they can go and burn their factories, right? For example, they do not have any insurable interest. So you need to have insurable interest. That means the surviving is of the product that you are taking insurance for is necessary for you. Its existence makes difference for you. Its non-existence puts you in financial loss. Understood? The third principle of insurance is principle of indemnity. Indemnity means a guarantee or assurance to put the insured in some financial position. What do you mean by indemnity? Indemnity means a guarantee or assurance to put the insured in some financial position. I'm sorry. Okay. Indemnity means or assurance to put the insured in some financial position in which he was immediately prior to the happening of the uncertain event. This principle is applicable to fire, marine, and general insurance. It is not applicable to life insurance, as loss of the family can never be measured in monetary value. Yes. Now understand, what do you mean by indemnity? To indemnify means to go back to the same position where you were before the occurrence of loss. Like if you are taking insurance of car and your house is burned along with the car, the insurance company will only indemnify the loss of the car because you have taken the insurance of the car. Okay, I'll explain you in a better way. Like for example, if I have taken an insurance policy of my car for up to rupees 3 lakhs, and when the fire got occurred in my car or the car got an accident, I suffered a loss of 2 lakh rupees. The insurance company, on making the claim, will give me or compensate me only 2 lakh rupees. Why? Because the loss that I suffered was of 2 lakh. The insurance company is giving me the exact amount of loss so that I indemnify. I go back to the same position where I was. A person cannot make profit out of insurance. Okay, if I have a loss of 2 lakhs, I'll be receiving only 2 lakhs. I won't be receiving 3 lakhs. Why? Because I have not suffered a loss of 3 lakhs. I cannot make profit out of insurance. Another case, if I have sorry if I have taken insurance of 4 lakhs and the loss that I have actually suffered is 5 lakhs. Okay, I have suffered a 5 lakh loss, but I have taken insurance of only 4 lakhs. So insurance company will pay me only 4 lakh rupees and not 5 lakh rupees. Here the loss amount was higher, but I have taken insurance for only 4 lakhs, right? So why will the insurance company pay me more? Why will they profit me out of their own pockets? No. So this is an important point, that the amount of actual compensation is limited to the amount assured or the loss whichever is less. Like whichever is less. This is an important point. If I am taking an insurance policy of 3 lakhs and I am suffering a loss of 2 lakhs, which one is less? 2 lakh is less. So I will be indemnified with rupees 2 lakhs. Similar case, if I am taking an insurance policy of 3 lakhs and the loss occurred is 4 lakhs, whichever is less? 3 lakhs. Here I will be given only 3 lakhs and 1 lakh will be lost. I hope I have made it clear, understood. Another example is given here. If the property is insured for rupees 2 lakhs and if the loss by fire is 1 lakh, then the insured can claim compensation of rupees 1 lakh only. Right? The fourth principle of insurance is principle of subrogation. Principle is applicable to all contracts. One more thing I forgot in this is that principle of indemnity is not applicable to life insurance company, because the value of life cannot be compensated. If the father dies, the backbone of the family dies, you can only assure the family that they will be financially helped by the money, but you cannot indemnify, you cannot put them back into the position they were before the death of their father, because the loss of a family member is something which cannot be compensated. So the principle of indemnity is not applicable to life insurance, but the principle of subrogation is applicable to all the contracts of indemnity. Okay, as per the principle, after the insured is compensated for the loss due to damage of the property insured, then the right of ownership of such property passes on to the insurer. The principle is applicable only when the damaged property has any value after the event causing the damage. Okay, so here the very first statement is this principle is applicable to all the contracts of indemnity. Like I just said, principle of indemnity is not applicable to life insurance, so the principle of subrogation is also not applicable to life insurance. Why? Because it is applicable to only things which can be indemnified, which can be compensated. like general insurance, fire, marine insurance, house insurance, vehicle insurance, goods insurance. Anything or product can be insured, and principle of subrogation is applicable on that product. Now, what is principle of subrogation? Principle of subrogation means in case of occurrence of losses, after the compensation is paid, the scrap or the product or the leftover things are taken over by the insurance company. Example, if I have insured my car and the car is having an accident and I am claiming money from the insurance company, and the insurance company is giving me my compensation, after that the car will be taken in its scrap position, in its weird position or bracket position by the insurance company. Now it is up to the insurance company whether they want to sell it in scrap or whether they want to crush it. Whatever the money which will be recovered from the scrap of the car will be taken by the insurance company. Okay, again I would like to mention that you cannot make profit out of insurance. Okay, like I have insured my car, I am taking a compensation at the time of occurrence of loss, and also when the insurance company is giving me money, I am selling the scrap of the car and again recovering money from it. No, I cannot do it. Once the subject matter is compensated, now the ownership of the subject matter is transferred to the insurance company. It is up to them whether they want to use it in what way. Okay, example mentioned in your book is Mr. owns, this is the same example. Mr. A owns a two-wheeler. The vehicle was stolen and subsequently Mr. A filed a complaint in local police station. Okay, I have lost my two-wheeler. I am Mr. A, and when I lost my two-wheeler, I went to the nearest police station and I mentioned that I have lost my vehicle. Then the police, then I go to the insurance company, and what do? I claim for the loss of vehicle. Later on, the insurance company gave me my claim and money on the occurrence of theft. I have insured against theft and I recovered my money from the insurance company. But later on, that two-wheeler has been found by the police. In this situation, what happened? The owner of the vehicle does not have any claim. That means I cannot go to the police station and say, like, give me my vehicle back. No. Why? Because I have already taken the money of loss from the insurance company. Now the ownership of the vehicle lies in the hands of the insurance company. Whenever that two-wheeler will be received by the police, it will be handed over to the insurance company. Why? Because I have already subrogated, that is, transferred my ownership to the insurance company. Understood? Now it is up to the insurance company whether they want to sell that vehicle or scrap it. Fifth principle of contribution. The principle of contribution is applicable to all insurance contracts of indemnity where the insured has taken out more than one policy or the same risk or subject for the same risk or subject matter. Under this principle, the insured can claim the compensation only to the extent of actual loss, either from one insurer or all the insurers. If the one insurer pays full compensation, then that insurer can claim proportionate amount from other insurers from whom the insured has taken policy. Now understand this. What does the principle of contribution means? The principle of contribution means that if a person is taking insurance from more than one insurance company, I am taking life insurance from ICICI, I am also taking from LIC and other one more company. So in case of occurrence of loss, in case of my death, my nominees will be getting money in proportion from all these three companies, or either from any one company. If one company is paying insurance money, the that company have the right to ask for the money from other two companies. Okay, like what will be the proportion? It will be as per the policy taken. If I have taken an insurance of 3 lakh, if I've taken an insurance of my house of 3 lakh from company A, of 2 lakh from company B, and of 1 lakh from company C. What is the ratio? 3 is to 2 is to 1. So in case of fire, if 60,000 rupees loss have occurred, I will claim insurance from all the three insurance companies. So company A will give me 3 ratio, company B will give me 2 ratio, and company C will give me 1 ratio. So the 60,000 will be divided into 6 parts, and company A will be giving 3 parts loss, 2 part will be given by company B, and company C will be giving me 1 part. So the loss occurred by company compensated by company A will be 30,000, B will be 20,000, and C will be 10,000. Also, it can be done in a way that the entire 60,000 amount is paid by company A, and then the company A goes to company B and C and asks for 20,000 and 10,000 respectively. Okay, contribution understood. So when is the principle of contribution mostly applicable? When the subject matter of loss is of high value. If the consignment is of lakhs and crores of rupees, and one insurance company is not able to take the risk of such a big amount, so it is divided into 2 or 3 insurance companies, and the insurance for the same product is taken by 2-3 companies, so that in occurrence of loss all these 3 companies can compensate together. Example given in your textbook is Miss Sayali insures her property of rupees 2,50,000 with 2 insurers. Okay, with T insurance company for rupees 1 lakh, and R insurance company for rupees 1,50,000. What is Sayali doing? Taking house insurance or property insurance from 2 companies, company T and company R. What is the amount of insurance? 1 lakh and 1,50,000 respectively. So if you find out the ratio, it will be 2/5 and 3/5. Okay, now if Miss Sayali's property is destroyed and the loss is worth rupees 1,20,000, then both the insurance company will contribute towards actual loss, that is 1,20,000, and divide it into the ratio of 2/5 and 3/5 respectively. That will be 48,000 and 72,000 respectively. Only the amount of loss will be compensated by the 2 insurance companies in case in the ratio of their contribution. Okay, the entire 2,50,000 will not be compensated. Why? Because we have already studied the principle of indemnity, wherein you are only put back in the position where you were before the occurrence of loss. Only the amount of loss will be compensated, and that amount of loss will be compensated in the ratio of policy. Okay, the next principle that we'll be studying will be principle of mitigation of loss. Insured must always try to minimize loss of the property in case of uncertain events. The insured must take all possible measures and necessary steps to control and reduce losses. Insured must always try to minimize the loss in case of uncertain events. Insured must take all the necessary steps to reduce loss. Hence, it is the responsibility of the insured to protect property and avoid loss. It is one and the same thing. The insured, the person who is taking insurance, should not stand and look the loss occurring. If there is a fire insurance and if my house is getting burned, it is my duty to try to stop the fire. to try and call the fire brigade, to try and call the police. It is all my responsibility. I cannot wait for hours for the fire to settle down and then go to the insurance company and claim for the money for the fire insurance. No, if I am taking an insurance of my warehouse and I get to know that there is a fire in my warehouse, I have to go and minimize the risk. I have to mitigate the loss. It is my responsibility to minimize the loss and make sure that the loss occurrence is as less as possible. Why? Because if I am not taking these necessary steps, in case of claim, the insurance company will investigate and ask me when the fire occurred, where was I. If I am found nearby the location of the fire and I have found not mitigating the loss, the insurance company will not compensate me any money because I have violated the principle of mitigation of loss. Because the principle of mitigation of loss states that the person who is taking insurance should try to minimize or reduce the occurrence of loss. For example, a house of Mr. Jayant is on fire due to electric short circuit. In this case, Mr. Jayant cannot remain passive and must try his best to save the house from the fire. Mr. Jayant must be active and cannot watch his house burn just because house is insured, right? Hence, it is the responsibility of the insured to protect the property and avoid loss. Why is mitigation of loss important principle? Because if there is no such principle, anybody who takes an insurance may burn their property and then ask the insurance company to compensate. They have no interest in reducing the loss. They are like, if the property is lost, I don't mind, I am going to get the claim. No, if you are not reducing the risk or loss, you won't be getting any claim as per the principle of mitigation of loss. And the last principle that we'll be studying is principle of causa proxima. Principle of causa proxima means principle of nearest possible cause. When a loss is caused by more than one reasons, then the proximate cause of loss should be taken into consideration to decide the liability of the insurer. The property is insured against some causes and not against all causes. In such a case, the proximate cause of the loss is to be found. If the proximate cause is the one which is insured against, the insurance company is bound to pay compensation and vice versa. Like if I am shipping my goods to another country through marine and I am taking marine insurance, and I am taking insurance against only certain things, like I am taking insurance only against safeguarding my products against the theft. If there is any theft during the voyage, during the journey on ship, my goods are protected. If due to other reasons, if my goods are damaged by rats, rodents, or by drowning of ship, I will not get any compensation. Why? Because what is the cause that I have insured my goods against? I have insured my goods against theft. So only in case of theft I will be receiving compensation. If my goods are damaged or lost due to any other reason, I won't be getting compensation. So whenever the losses occurred, the insurance company first investigate what is the reason of the cause, and then if the reason of the cause is mentioned in your insurance policy, then only you will be receiving insurance claim. For example, a house was insured against the risk of theft. I have taken theft insurance. There was a theft in the house, and before leaving, the house was set on fire by thieves. The thieves came, they did theft, and then they set the house on fire. Now there are two causes of loss, that theft and fire, and the nearest cause of loss was fire, as the house was insured against the theft and not by fire. the insured will not get any compensation from the insurance company for loss by fire, but he will get the compensation for the property lost by theft. Yes, there I have a house, I have insured it against theft, and the thieves, they set my house on fire after stealing goods. So now when I go to the insurance company, only the loss occurred due to theft will be compensated. The entire amount of house burnt on fire will not be compensated. Why? Because there were two causes of loss: theft and fire. But I have insured only against theft, so I will be compensated only against the nearest possible cause, and the loss occurred due to another reason will not be compensated or cannot be claimed by me. Understood? So these were the 7 principles of insurance. Thank you.